Silver and gold going to the moon. Banks like the First National Bank going under and getting their assets seized. Spirit Airlines barely hanging on. And the bond prices, interest rates get cut, but yet the bond prices continue to go down. Why is this happening? In today's video, I'm going to explain all of it, and I'm going to give you a hint. I've been saying it for the last month or two. This is Rice Finance here, and in today's video, I'm going to explain all the things I just said. But before I do that, be sure to hit the like button, comment, and don't forget to subscribe before we dive on into this. I got one word for you guys, and most of you probably already know it. Yes, I'm talking about recession. Unfortunately, we appear to be in a recession. I've been saying it all along, guys, and fortunately, this is what we're going through. Let's take a look at silver and gold as to why they are rocketing. And yeah, I just answered my own question. Unfortunately, people are not trusting what's going on in this world. They're not trusting what's going on in the possible potential election. There's a lot of volatility with that. They're not trusting what's going on with the markets, and they're not trusting what's going on with the Fed and their ability to control rates, possibly print more money. And unfortunately, or fortunately, if you saw my last video, this is causing silver and gold both to kind of skyrocket. We appear to be going into some bullish trend. As you can see here on the charts for silver and gold, it's looking kind of like it did in 2008, back when we did actually have a technical recession. So as you can see, silver and gold starting to go up, and might be something you might want to consider before they actually start announcing that we're in a recession. But let's start moving away from silver and gold, and let's talk about something that actually might correspond with silver and gold going up. The bank foreclosure. The First National Bank of Lindsay, as you can see, just recently foreclosed. And they actually went under and got their assets seized by the FDIC. Now, I don't think that this is going to be the only bank that is going to get their assets seized and go under. I think that this is just the start. Unfortunately, when rates start getting cut, if banks are not thinking about this and they're not preparing for the potential rate cuts due to the fact that we are actually in a recession and people are not doing well, and they're going to continue to cut interest rates, unfortunately, there might be a potential for a lot more banks to be going under. But for now, it appears the First National Bank is the first one to the plate, besides the ones that happened in the previous years. Silicon Valley, I'm sure you guys remember, the biggest one. But these assets did end up going to Trustco Bank and will now be taken over by them. So let's be on the lookout for much more banks potentially going under. The goal to look at there is to make sure that they have more deposits than loans, and if they have enough cash on hand to be able to take and handle a potential run on the bank. Speaking of things going under, let's talk about Spirit Airlines. What happened today? Why are they up so much? Well, they had just pushed back a debt refinancing for $1.1 billion that was supposed to happen on Monday into December. So what does this mean? It means that they're going to have to refinance their $1.1 billion, which would then increase their interest rates. They would then have to pay more money to that debt. And as you can see with the finances, Spirit Airlines is really not doing good. They are right on the verge of going under. So what does this mean? They're just delaying the inevitable. They need some Hail Mary plays in order to get out of the situation they are in. Otherwise, Spirit Airlines will be no more. I am seeing a Chapter 8 bankruptcy, and I'm not seeing a way out for them unless if they start selling off parts of their business. Moving on to bonds, why are bond prices going down while the interest rates got cut? For those of you who don't know, it should be the opposite. When interest rates get cut, bond prices should be going up. And there's one word as to why these are not happening, and that one word is trust. Yes, no one trusts the Fed. It's unfortunate, but because no one trusts the Fed, things are going completely buck wild. And unfortunately, this is causing the bond prices to continue to go down, down, down. Now, I don't know how much further down. As you can see, it appears to be bouncing off that 200-day moving average. It's within the chart limits, so I kind of expect for it to consolidate, potentially rise again, and price in another potential bond cut, interest rate cut, but we'll see. Because at the end of the day, no one really knows, and we're going into an election year. This is causing a lot of volatility and a lot of issues with the market, and no one really knows what's going on, and it's causing a lot of havoc in the markets, and it's causing a lot of havoc in real life. So just one thing to consider when looking into the bonds, just be wary that nothing seems to be going, everything seems to be going upside down. But anyway, just wanted to provide you guys with a little market update. I feel like there's been a lack of that on the financial side of YouTube, so I feel like I'm trying to fill in the cracks. So hopefully you guys were able to get something out of this video. But for now, that's been Rice Finance here, and I hope you guys have a great day. Be sure to hit that like, comment, and don't forget to subscribe. So thank you guys for watching, and take care now. Bye-bye.